What is going on, everyone? Welcome to my channel. This is Jason, aka the Frugal Investor. This video is going to be a quick update on the portfolio. It's been a long time since I've done any updates on the portfolio. Also, I am going to mention what stocks I'm buying right now. I have added a lot of things in the portfolio, made a lot of changes. So that is what I'm going to mention in this video as well. Give you guys an honest update, no editing, raw video, just what's going on, what I added, what I bought, what I sold. Didn't sell anything really, what I bought and why I bought it, and what are the reasons behind it. So this is going to be a raw and uncut version, and let's get started. So it's been a long time since I uploaded a video. Last time I uploaded a video was I think 1 month ago, and been quite busy with this new year starting and a lot of things coming up, a lot of things planned out in my life as well. So a lot of things coming on. I'm turning 27 soon, and yeah, it's a huge time for me. It's a great time for me, and I'm planning big things out. So to give you guys a quick update on the portfolio value is very close to the 280 mark. The reason is because I added almost 60k just within this last dip, and this is my public portfolio. I added 60k just within this last dip. Almost bought anything I can buy that I've looked valuable, that looked like a solid business, a good company, and all that whole spiel. Basically a good company, solid fundamentals, numbers look good, revenues are going up over the past 10 years, top line, bottom line is going up, CEO is good, leadership is good. Debt, net debt is negative. There is no debt on the company's balance sheet. They have a lot of cash on hand. They have a lot of moat with either it is their product, whether it is their customer base, whatever the reason. They are diversified across different continents. So those are some of the basic factors that I look at while I'm buying up company. So I'll make a separate video on that sometime. So yeah, so basically these companies, that have a huge moat around them, manage very well, growing really fast, been growing over the past 10 years, 15 years, and growing still. So yeah, so these are some of the businesses that I added to the portfolio. Currently the number of holdings is I think 26 to 27. I also added some mid cap value fund and a small cap value fund, just to diversify it a little bit. Even though I was against diversification just a couple of months ago, but now I've decided, to kind of diversify it a little bit to kind of cut back on my risks a little bit. And it's going to average out my growth over time. It's going to average out my growth to like 15%, 20% over time annual. But it's going to cut back on my risk a lot as well, because I was getting hammered. I was getting hammered with Alibaba, getting hammered with Kimball Electronics, and now PayPal is also down quite a bit. But I bought more because I believe in the fundamentals, and I believe it will be a $1 trillion company within the next decade based on the growth they are showing right now. So yeah, so those are some of the things. So with that said, let's get started. Let me first of all give you guys a glimpse of what I'm holding right now, which companies I'm holding. Then we'll go over um, which one I'm buying, and then we'll go over the new ones that I added, why I added them. Also, we'll go over my dividend income as well, how much dividends I'm making so far. And yeah, with that said, let's get started, guys. So to give you guys a quick glimpse in the portfolio, currently I own Google, which is one of my biggest holdings, which is actually 9% of my portfolio, which is quite high. I shouldn't go over 6% or 5% for one company, but it is 9% of my portfolio. So a little bit risk there, which I'm looking to diversify, which I'm looking to spread out in a couple of months down the line. Apple, again, 7.2% of my portfolio, up by almost 20%. Up by almost 19%. Google is up by almost 12%. Costco up by almost 8%, almost 9%, and that constitutes 6.5% of my portfolio. And just so you guys know, all these holdings, I bought them in December of 2021. So I just bought them 1 month ago. So everything, all this performance of this portfolio, this 12% performance of this portfolio, this is in the last month. This is not in the past year or in like 3 years or whatever. I sold everything and then I bought back in again. So this is the last month, because of tax reasons I did that, but this is the last month that this growth is there. Okay, 12% I'm up just in the last month, just so we are clear. So overall I'm up by almost, if I count from when I started buying, which was in September, I think September or November 17, I started buying in this portfolio. November 17, right after the pandemic. So that time, if I count that time, I'm all up by almost 35 to 40% so far. So yeah, this is from this year. This is from like from this year. So yeah, so Google up by 12%, Apple up by 19%, Costco up by 8, almost 9%. Facebook is 6.5% of my portfolio, up by almost 1%. Not quite heavy, but it's still my long-term hold. Thinking about it for holding it for at least 10 to 15 years. Lowe's company has a lot of debt, and that's turns me off. So I've reduced it to 2%, but still it constitutes 6% of my portfolio. I'm going to be reducing it as my portfolio value grows, kind of spread it out a little bit. Microsoft, I have added new company, Microsoft. I was bearish on Microsoft. I wasn't a big fan of Microsoft because of the leadership and whatnot, previous leadership and whatnot. So, but now, I see the numbers, I see the growth, I see the moat, I see the strong base. I see the kind of like a very strong organization, and that's the reason I decided to add it, for that extra security, for that extra diversification as the portfolio value is growing. So yeah, so I added Microsoft in the portfolio, and I'm going to be holding it for the long term, for that extra added buffer, extra added security, extra added diversification. So that's the reason I decided to add Microsoft. The business is like a beast, it's like cash flowing machine. They have such a huge pricing power. They can raise the prices of their product. They have almost no competitors in their main product lines. Well settled business, and spread out across almost China, India, USA, almost every other country in the world. So yeah, so very bullish on this. The business is really really solid, so that's why I added it to my portfolio. Again, Medifast is again network marketing company, now spreading their wings in the Asian markets. They're primarily in the US. 55,000 coaches which have used their product, and then they see the changes, and then they start selling the products, which I really like, because then they are more motivated, because they take ownership of what they are doing, and they are more motivated to sell the products because they have seen the results themselves. So which I think is a really interesting point that made me think about buying this business, and I bought it. And currently it's almost 6% of my portfolio, and I might be increasing it down the line. Also pays a great dividend. Very fast growing company. Top line is growing, bottom line is growing. Small company, not a big size. I think even less than $1 billion company. So that is also a bullish factor, because it can multiply really fast. So that's why I own Medifast, and it's one of my biggest holdings. Followed by Aero Financial, again a bank that did not cancel its dividend during the 2008 financial crisis. One of the only banks that did not do that. The numbers are really good. Tangible book value is good. A little bit expensive in some manner, shape, or form, because the PY is 10, which is expensive, more expensive than other banks, but still a solid bank whatsoever. No matter what, all consider currently 5.5% of my portfolio, down by almost 2%, and pays out a dividend of almost 3% right now. 3% dividend payment is $500 million is the market cap. So there is a huge room for it to multiply, spread out in New York, I think Greenwich County. That's where all the branches are, and strong customer base, a very rich county. So customer base is strong. Management is also really good. From what I've seen on the calls, they look very dedicated to serving the customers and giving out good value. The loans and all these things, they are their major products. So very bullish on it in the long term, because I see this bank doubling or tripling very fast down the line, maybe 7 years, 8 years. But we have yet to see how this will play out. They have a very good online platform as well, which is unlikely for a small bank, but yeah, so the very good online presence as well. So yeah, so that's why I'm buying this bank. Basically the numbers look really really good, the financials are really solid, and the growth has been crazy over the past like 12 years, 13 years. Even the dividend has been constantly growing, even during the great financial crisis the dividend was growing. So yeah, so that is why I hold this one, and it's one of my biggest holdings. Followed by Equinix, again the data center play, spread out across different countries, down by almost 13%, 12% actually, 5.5% of my portfolio, but still holding it for the long term. Very well positioned data center company, one of the biggest players in its game. Also, data centers, I'm bullish on them in the long term, because I think that data is the currency of the future. Data is the currency right now, and you know All companies, they need a data infrastructure, they need a data center to kind of store their information. Now for Microsoft and Amazon, it's easy because they can build their own data centers, but not every company has a budget to do that. So they need companies like Equinix, which is a huge market and it's going to be growing in the future as more startups are coming in, more internet infrastructure is getting built, more companies are coming into the market. So really bullish on this one, on the data centers. And yeah, that's why I'm holding it. My favorite choice was digital reality, but the numbers looked a little better on this one. So that's why I'm holding it. Maybe I'll switch it for digital reality down the line. We will see. It also pays a dividend. USANA, again a small company, less than like 200 million, 300 million market cap, spread out in South Korea, USA. They just bought a protein bar factory in Massachusetts. um, Leadership is young, uh, taking chances, smart. The only bad thing is they're too spread out. They are selling with vitamin pills in South Korea, which is one of their best selling products. Selling like I think beauty care products or things like that in China. Uh, the South Korea pills are the major revenue products for them. Also, they are more now spreading out more in the Asian markets, and also spreading out more in the American markets. It's a network marketing company. So yeah, so P by E is good. Low P by E, I think I bought it at a P by E of 14 or 13, something like that. No debt. The company has no debt on the balance sheet. They have a lot of cash on hand. The revenues are increasing. So a huge potential for this company to become a billion-dollar company very fast. Currently it's at around somewhere around 200 million or something. So that's the reason I hold this, and we yet to see how it will perform. Baba, the Alibaba. This stock down by 30%, almost 30%, down by $5,000, still holding strong. Not buying anymore because that is what I'm going to put in it. That's it. And if it goes up, down, whatever happens, I'm going to hold it for the next 10 years, 12 years. Business is good, fundamentals are good, but the government is uh, you know, uh, kind of cuckoo. So that's why, I'm holding it. Let's see how it plays out. Kimball Electronics down by almost 36%. Now, I think the main reason is because of the supply chain issues that this business is down. Because a small business, it's not a very big business. I think market cap is less than 500 million. Also, pays a dividend also. But the thing is, they have a good tangible value. Tangible book value is almost equal to the stock price. So there is a very good margin of safety with this business. And also the thing is. Because of supply chain issues, their revenue kind of came down because during the pandemic their revenue jumped up all of a sudden there was so much demand. They supply chips for they supply OEMs for electric cars and stuff like that. So there was a huge demand for their product all of a sudden, and as the pandemic rush kind of clamped down, kind of slowed down, the demand reduced. So the earnings they came down. So that's why we are seeing this drop, this 35% drop in the stock price. So, long term, we'll see how this plays out. Of course, it's a small company, so things can go either way. But we'll see how this plays out. I think it'll play out really good because the increase in the demand for OEMs, for electric cars, for electric products, just in general markets in Asia, India, in USA is increasing. And this company is very well positioned to take benefits of that. They have recently built a warehouse in Mexico. So, they are building themselves really quite well for the long term. So, let's see how it plays out. Will their bets play out or will it backfire on them? We've yet to see. So that is my thesis on AK Electronics. Now moving on to Nvidia, which is a new play that I've added. Numbers look fantastic. I think the growth is yet to come. Still a $500 million company, a $500 billion company. I think it will be a $2 to $3 trillion company down the decade. They're building out the graphics cards for the Nvidia graphics cards for players and things like that, for data centers players, which serves as a base for the infrastructure on which they can build things. So the company has a huge moat with its with its customer base, with its product, which is almost unbeatable. The performance is so good and all. And also they're spread out in different continents, spread out in different countries, and a huge place, huge marketplace for their product. So I'm really bullish on Nvidia in the long term. This is of course a very long term play. If it dips more, I'll be buying more. Right now I think I got it at a good price when the dip was there last week. So I got it at a good price, and yeah, this is one of the companies that I bought and I purchased. Moving on to Capital One Financial, again, really bullish. Some debt can be reduced. Management can do better with some things, but I know the people leading the bank personally, CEO and all. I've met them. I don't know them personally, but I've met them a couple of times, and I know their mindset. I know what their mission is for their bank. I know what they're trying to do. They're trying to make this like a technology company, spearheading the technology banking sector, kind of moving it away from the physical traditional banking style and moving it all to online banking. So they have been closing a lot of branches recently. So really bullish on it in the long term. We'll see how things play out. Local bank in Virginia. We'll see how things play out, spread out nationally, even internationally in some countries. So, really bullish on it in the long term. Let's see how things play out. I also added mid cap fund. Not a huge part, only 3% of my portfolio, only $8,000, 9,000. But still, it's there just to provide that extra buffer, extra diversification. The real meat of the portfolio stops at Nvidia. The real meat of the portfolio stops right here at Capital One, Nvidia. This is the real meat of the portfolio. This is what determines the direction of my portfolio. These 10, 12 companies are what determines the direction of my portfolio. Now, all this from under PayPal, I would say under PayPal, right? Under PayPal, everything is just, if it plays out, it plays out. It doesn't play out, hey, no big deal, because only like $7,000, $8,000, which is very small amount compared to the size of my portfolio. So Schwab US Mid Cap ETF, again, added it for that extra buffer. Mid cap stocks have sometimes performed better than large caps in some markets, in sometimes. So yeah, that will give me that added benefit as well. JP Morgan and Chase, again, it's like a savings account, pays a great dividend. Banks are down right now, it's okay, I'll keep buying. I want to make this holding to be at least 14, $15,000. So it'll be a big holding soon. And it's like a savings account, putting your money in a savings account, and getting the dividend on it. So very safe position, almost 1 trillion cash on hand. Jamie Dimon, absolutely fantastic CEO. So it'll be good long term. PayPal had a huge dip of 30%, so I bought today when it went below 130 for a short bit. I bought today for below 130, so my entry price in PayPal is right now it's 164. I want it to be even low because it's available at such a good price. So I'll be buying more today, hopefully tomorrow, of PayPal, and I want to make it one of my biggest holdings as well. Insperity, Trinet, HR companies, just added just for the diversification sake, holding them for the long term. Let's see how things play out. I don't see the total addressable market for these companies is not very huge, so I'm not really crazy bullish on them. But I think they will be good in the long term. I think so. I'm not yet sure. So these are two companies that I'm playing the cards on. If the cards turn out good, it'll be good. If not, it's okay because Insperity is a really solid business. CEO is good. They have started from scratch, started with nothing. So yeah, it started in Texas, good company. Trinet is a California-based company, and Trinet does what Insperity does, but does it more in an online frame of things. So really bullish on them. Let's see how it plays out. Know the companies inside out. Know the companies well. Know some employees in there. Talk to the investment people in there as well. It's good. They say good things about the company, and they say good things are still yet to come. So let's see how it plays out. As this Insperity is now spreading international as well. So we'll see how things play out. Netflix, again, was down by a lot recently, got hit like crazy, and so I found an opportunity and I started to buy it. I think Netflix has a moat like Google and Facebook. The moat is, its first mover advantage. The moat is the huge amount of customers. The moat is the choice. It is the prime choice for everybody. Disney Plus is not the prime choice. Netflix is the prime choice. So that is what gives it the extra moat, and partly motivated by Joseph Carlson as well. Not going to lie. So that's why I added Netflix in my portfolio. Small cap ETF also added for that extra buffer. Small part in my portfolio, less than 2%, 1.5%. And JEPI, the dividend for extra dividend income, 7% dividend income. Extra space storage, added that also, just to get that extra diversification and get some things in real estate as well, because everything is, as you can see, mostly focused in the tech sector and the finance sector. So just to get that extra diversification, I added the real estate part as well. Tesla. I bought a Tesla recently, and in favor of that, Tesla was down. It was below 900. I think it was below 890 also. Went in ahead and bought it. Let's see how it plays out. Same with Affirm. The reason I'm buying a firm is because I see the number sign everywhere. Anywhere I go, I'm seeing like most of the businesses they are using a firm to pay for things. So that is what makes me so bullish on this one. So I'm excited. See, I think I see a huge potential for a firm. I think I see a huge market for this kind of product, and a firm will of course have the first movers advantage in this space. The Let's see how things play out. Atlassian, again, I use it on a daily basis. Zira is their product. Started as a bug fixing tool in software development, but now Zira is like the heart of any product that is being developed, because agile coaches, scrum masters, agile development, everything is turning going to agile and safe 5, and Jira Align and Jira are like the heart of that. Without Jira there is no development, there is no product development, so it's at the heart of everything. So I'm very bullish on this company. I'll be adding more money to this. Their competitor is Azure DevOps and ClickUp and things like that, but none of them is as proficient and as loved as Jira. That's what I'm going to tell you. Also, there are non-technical tools like they can integrate, they can help you with continuous integration and continuous development. They can do things like connecting the GitHub buckets with your programs and all within Jira, and they can connect you with Cucumber as well. So it's a lot of features that they are adding into the product itself, making it better and better, which the competitors are not doing. The competitors are kind of left behind in that space. So that's why I'm bullish on it, and I'm going to be buying more in the long term. Roblox, same thing. Everybody's using it. Someone told me, hey man, my kids are always on Roblox. So I was like, oh wow, let's see which stock is it. So I decided to buy it. So I'm holding it now. Asana, one of my subscribers down in the comments below suggested that. Love it, love it. Thank you for the comment. Thank you for watching the videos. Thank you. Much love to you. And because of you, I put some money in it. I might be increasing it in the future. I'm still asking people who use it on a daily basis about the benefits and all. I haven't used it directly myself, but I might be using it someday in my space. So real excited about it. Thank you for the suggestion. Thank you for commenting, and thank you for watching my videos to the subscriber who commented in the down below for Asana. So yeah, guys, that is a quick update on my portfolio. Those are the companies I'm buying. Those are the companies I've bought recently. Added a lot of diversification, but the meat of the portfolio is still the same. The companies that were the biggest part of the portfolio are still the same. Till PayPal, I think, is what decides the development of my portfolio. I'll make Netflix bigger. I'll make JEPI bigger. I'll make Atlassian bigger. And these are some of the companies that I'll make bigger. And yeah, so this is how things are going on right now, and I would love to know, how is your portfolio doing? Did you buy during the dip, or did you get squandered by the media and the news and you did not buy anything? Hopefully everybody bought. Hopefully everybody that watches this channel bought. In this community of investors, we buy the dip every time, because we are long-term investors. We are buying solid businesses, so we trust the process, we think long term, we have a vision to build wealth for our families and for ourselves, and we never squander a red day. We buy for long term, we think long term, we have long term plans, and we buy solid businesses. We are owners in solid companies like Microsoft, Medfast, Arrow, Google, Apple, and we are buying them for the long term. Hopefully, everyone is doing that as well. With that said, guys, thank you for watching. This is the Frugal Investor, and I'll catch you in the next one. Thank you.